Hey, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Saturday night, November 26, 2022. Happy Thanksgiving weekend. We'll start the swing trade frame review as usual with a review of Chi Wing Chong's um, RL30 slopes with the Z scores of key market and sector spider indicators. So we'll take a look here. The S&P has come out of the doldrums from minus 1.5Z and has had a nice strong move and has stabilized this last week at a point above 1.0, so that's really favorable. It did not give back and it's poised for another strong move up. So all that's pretty good. Finance has peaked and is rolling over. Materials are holding steady. So we're looking at the metals and lumber there. Technology has stopped its slide and is in a position where it could take over leadership at some point. But what we're seeing right now, along with the decline in energy, is that the mature sectors, the staples, the healthcare, the industrials, those are outperforming technology right now. So we're not going to get another huge surge in the S&P until technology takes over the lead, in my view. But as it stands right now, we're seeing value buying in the mature business sectors, so the mature industries. And you're seeing that here as well. This is the comparison between XLP and XLY. This period in blue is when XLY is better than XLP. And that means those are typically speculative. And then when you see XLP take over and actually lead the way up, now you're having the staples and mature companies, the Walmarts, the Home Depots, the Coca-Cola and McDonald's of the world, healthcare kind of leading the way. And that's still the case right now. And that's why DIA is actually better than SPY right now in terms of relative strength. So the large caps are getting it done. All right, into the frames. And again, many thanks to Ken H for his hard work. All right, this is Goldman Sachs, and this, as you can see, was one of the reasons why finance, after everything bottomed out, was leading the way. Here's your Kata 2 entries. Here's an emerging dragon entry, another emerging dragon entry. So really strong. This little dip and gain right here, it just tells me there's more room to go. I mean, it's not really overbought until it gets above 420. So there's still another $40 available to the upside, which is a 10% potential upside. So this could technically have been a Kata 2 entry here on Friday. But any break above 388, I think, is certainly playable. A break below 375, I would only expect to see that if we saw a big sell-off in the market after like a week of complacency. But that's a pretty strong statement of value, and just the fact that it's better than the previous hump. This is better than the broader market itself. That's a statement of strength in finance, and with Goldman Sachs as the leader. Hard to argue with that one. Real estate is still in the early days of recovery. On the weekly, it's still in the winter. It's about ready to break into the spring if it can get a little bit better. Next target on the upside is 98. And you've seen 1, 2, 3, almost the start of a fourth move. And this is not resistance here. That was just selling. Resistance is in here. So 95 is a reasonable upside, which is plus $7. So if you can, there's about $1 risk. So if you've got $7 to the upside, and then if this breaks down here to 85, you got 2-1, and if that breaks, you got a couple other easy targets to see. So 81 is in play on the short side. So you got about a 7-1 reward to risk ratio in either direction out of this tight compression. And we're going to see a lot of symbols that are in compression because of the low volume week on Thanksgiving. But the fact that we went into sideways quiet and have come out of the doldrums, out of the depths, is pretty favorable. And people are going to remember pretty soon that, oh yeah, U.S. real estate is a store of value in tough times. So I think IYR's still a buy. Early days in treasuries, you see Ken H has got the COTA 2 entry here from earlier last week. I would have loved to have had it in here, but we can live with that. Again, if it breaks above 103, 110, 108, I should say 108 is in play to the upside. So you got about $5 to the upside. He's in the money now for about $1.50. I wouldn't be opposed to adding another position here, and playing for another $5 increase. That wouldn't be out of hand. But I would not let that one go to zero. I mean, I would. I'd stay locked in, make money on that trade. But one of the things about treasuries, you'll just notice, boy, does this thing trade nicely as a swing. And again, there's still, if that's leg one, you still got 2 legs to the upside to 120 before it gets fully valued. I like it on the long side. U.S. Steel, boy, this thing is just a rocket ship or a water bug, depending on which way you like it. I like this entry here. This was a emerging dragon supported by a couple higher lows and then a breakout. It's held nicely. Could have added a second position. It made a nice run and closed very well. I think I'd be looking to add another position above 26 with a tight stop and then try to get the entire, your stop should be right about here now. If you get a second position on, get that next position locked in. What makes this nice is that it's north of 25, which was the previous strong resistance. It's above that now, and it could get up into this pretty easily, 30 in the 30 range. That's virgin territory right there. Failure through here, and then it's back into this channel between 26 and 19. So don't fall in love with that position. Make bank on the fact that you got money in hand already. But I'm ready for more upside. ExxonMobil has been a good swinger. When Ken H puts his second position on, it seems like that's been an indication it's time to fish or cut bait. So this is a nice a 1, 2, 3 entry. Gets the second position on, scratch. Re-entry on a COTA 2, second position, scratch. But that's pretty good work right there. We talked last week about why these other exits were preferred to suffering through all of that psycho pain. But if this breaks to the upside, the pullback in energy has allowed for a little bit of a little up, down, and up, a little COTA 2. So don't be surprised if this thing, we get an energy reversal to the upside. I'm not averse to getting on board this thing again. It's at such an all-time high, there's no resistance overhead. And people have to own energy just because. Bitcoin, is going to benefit from in the long run from this sell off. This feels much like the uh, long term support. And, I think it has to get above about 1060 or 1070 to really get into a runaway move upside. But it's shown some evidence of wanting to honor that support level around 10. To me, it's an intraday trade. If you've got a wide stop on it, maybe a 20%, I could see just hold your nose and buy it, and then let's see. Don't confuse FTX with a uh, with failure of crypto. FTX is straight Ponzi scheme financial scams. It has nothing to do with Bitcoin and crypto. It has everything to do with greed and Ponzi. The CEO of the Chicago Merc Exchange is worth listening to on this one. That guy called the fraud early, and they should have been listening to him. Somebody ought to go to jail for not listening to him. All right, Beyond Meat. This is almost beyond disappointment anymore, but that just means that this is what bottoming action looks like. This was the green movement up here at 105. Not so much, but this is evident. That's like almost 3 months of failure to fail further. With it feels like 10 is the bottom in that thing. So and then there have been a couple surges of local buying already, and that's a 30% gain in both of those. So you would disregard this bottoming action at your own peril. I can certainly see buying a breakout above 12.7 with about $1 risk and just wait and see. I think that's a very interesting play. I don't see much downside in it. RELL Richardson Electronics. This is going to be your fireworks. Well, is that the premonition of new things to come, or was that the last gasp? But you figure 1, pause, 2, longer pause, 3, somebody knows something. Ken H got some of this on the breakout above the emerging dragon entry. I'd be ready to get some more of this on a turbo and use that to build in a cushion of safety for your core position. But that thing has got no reason not to continue. Who wants to sell that? Nobody. Merck in healthcare, and this is emblematic of the mature industries, the cash producers. It's had a nice consolidation in here and has broken to the upside. Ken H gets the breakout above resistance, almost with a Kata 2 kind of an action, and that shows every evidence of wanting to go higher. Who's going to sell it? Who's going to sell Merck? Nobody. So I'd look to add with markets money. I like that one. ELV, Elevance Health. This one has more room to go. It could be pulled along by the joy of healthcare right now. It's at a pretty critical state to me right now. This whole piece around 500. Yeah, it could go higher, another 10% higher. It's broken clear of that resistance. Ken H has a nice entry here. I'd have my stop, I think, right there. I don't mind adding another position, to be honest, with the idea that it should get to 530 without too much difficulty. Maybe there's some resistance at 520. But I think if you bought another one and then it gets to 520 and starts to fail, get out of the whole position. But if it goes through 520 and keeps going, the real test to me is at 530. But I like that one. If you saw healthcare suffering overall, and you said that was going to be a top, don't let this position go negative. But then, so if you have to exit somewhere in this region, that's fine. And then you could be short under 500, looking for 475, 465, and 450. Now, I would only do that if I also saw XLV on the downs, and if I saw XLV was worse than the SPY. So if the SPY is going down and healthcare is worse and this thing starts failing, then there's an argument for maybe why that could be the case. But I think I would rather play the sector short than the individual company. Walmart, this should continue to do well all the way through. This is going to be an amazing buying season for Christmas. That's a good entry. It's broken above this, broken above that. You have a little bit of cushion here. I think you could even think about adding above 153. The peak is 158, so you got about a 3% tactical target. If it gets above 160, look out above. People got to put money somewhere, and that's a proven winner. Honeywell, just forget everything else I said. Just keep buying these guys. Every reinforcement. This is tech that's working. It's already well above that resistance level here. And if he gets above 224, look out above. This is such a great company. You got Ken H has 2 positions in. Keep working it. Cisco is also one of the tech leaders now. You know, we've been watching these other guys in the chips and all that, but Cisco has just been getting it done. It has come back out of all of these doldrums and is pushing really important price levels to the upside. And that's a pretty good position above the emerging dragon. And I don't think I would let it get below. I don't want this one to go negative. I think I'd be right about 48. But if it works, it's above that peak, and it could go. And it's been Cisco and IBM have been the 2 tech leaders that are quietly getting things done, while Microsoft and Apple have been suffering. So stay with that one. Watch that close. That's actually kind of a stealth play. Semiconductors, showing you where the early strength in tech is. This is a great emerging dragon. Second position cut, re-entry. Second position was aggressive. Don't let this position go negative, but if it gets above, I would say 228, I wouldn't even be averse to a third one, because this thing wants to go to 240, and you still got a 10% gain to the upside here. Yep. So this is the test point right here, right? If this works, then it is negating this entire downward pressure. So this is the decisive moment. And there's enough upside in technology that could be the case. John Deere, we're a little late getting into this guy. That little rising triangle should have been a hint to us. But I don't blame you for not chasing that gap. But if this holds, then anything above 445 is legit, and you're at all-time highs and going. Love these guys, and we should have been on them sooner. All right, that's everything we got for today. Get this published and posted, and see you tomorrow morning for the Euros Creativity 202, and then tomorrow night for some short lessons.